All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Yesterday morning, I was watching the market going, okay, are we going to see some of the metrics change? Are we going to see a shift in things? And we ultimately didn't get that. We didn't get a real shift in anything. And, this morning, wake up, market futures up. They went limit up. Okay, market's going to have an update today. But are any of the metrics going to really shift in a material way that either number one gives us a nice bullish signal on the market vibe for some follow through to all of this, or number two gives us some signals for the challenge. And so let's go take a look at it. You see if anything here is shifting. As far as where the market is, you can see the S&P is basically sitting where it went limit down on Wednesday night of last week. And so we see it break last week's range here yesterday, but then today snapping right back into last week's range, but nowhere near last week's highs here and last week's lows. But in a very different position for a lot of stocks and for a lot of the metrics. So let's go take a look at that here, and let's start with possible challenge signals, and let's take a look at the upside crossovers that are happening here today, because on the challenge watch list we have 11 stocks with upside 3-7 crossovers. Now, a lot of them are looking like a Chipotle, where it's this straight down, has this snap back up, and okay, great, but that's not going to set a challenge signal here for it. It's not great risk reward in terms of just the overall play here with it. And so, okay, nothing really to trade here, but it is what I need to see as a precursor to get some sort of higher low and some sort of next upside signal. It's also a precursor for what is needed to get some sort of downside signal. And I think that is one of the things I have to stress here, is that this relief bounce could simply lead into some downside signals. So we'll have to kind of see how it shapes up. But anyway, some crossover action is nice to see. Finally, nice to see some of that coming in out there. EOG Resources has it going on. GLD has it going on here. GOLD, Barrick Gold, with its gap up here today, has it. We see it with Intel, and you can see this is very much like Chipotle. And most of these charts, they kind of look the same, don't they? Now, one that's a little different is JD. This is one we've talked about several times during this market bath, is holding up incredibly well. Just holding up phenomenally well. And you can't really look at JD and go, oh, you know what, something crazy happened in the market. Most stocks you can look at it and say, wow, something really happened in the market to create this. With JD, no. This could be just normal action. And these are the types of stocks that tend to go significantly higher after massive pullbacks in the market. So we'll see. But nice little crossover on JD. I don't think it's going to be a signal just simply because of the lower low that came in, but it does have a chance because of where its relative positioning is. Las Vegas Sands has a 3-7 crossover. This looks like Chipotle. Micron 3-7 crossover, looks like Chipotle. Oracle 3-7 crossover. This one looks like what was the other one? This one looks like Intel, right? And then UPS. UPS here. Now this one is coming off of a higher low. This one is a little bit different than the rest. Now it's underperforming the market today. Keep that in mind. But again, that doesn't really matter for the algorithm. It is one that does have a secondary 3-7 crossover. It had its initial 3-7 crossover last week, downside crossover yesterday, getting a nice little upside crossover today. So I'll be very interested to see where UPS lands. I did go look at the options earlier on, a lot of the stocks in the challenge watch list, and let me pull up UPS here and show it to you here. Maybe if it'll come up. There we go. But if we just come out to the monthly, take a look at the spreads on the monthly options. 5 to 590, 440 to 665. These are the regular monthly options. These are the ones where the spreads tend to be very tight. If we go out another week here to the weeklies, you can see 550 to 910, 440 to 885. They're just simply not tradable. Market makers are basically saying, get out of here. I mean, from a challenge standpoint, there's no way I could even fill this and expect that others would get a similar fill price there with UPS. So hopefully that changes if we do get a signal. If we do get a signal, I will try everything I can to, get some sort of play if we have to finagle something a little bit, that others can join in on. But, we'll see how that shapes up this afternoon. And then the last upside 3-7 crossover is U.S. Steel. Coming off of a new low, most likely won't be a signal. Kind of looks like Halliburton, though Halliburton doesn't have the crossover going on it right now. And it's amazing to see some of the percentages on these snapbacks. Halliburton up 20% today, and you go, wow, 20%. That doesn't really. If you're a Halliburton shareholder, 20% rally today doesn't necessarily feel all that great, right? It just doesn't do justice to what the pullback has been thus far. We are seeing stocks like Walmart pulling back today. Procter and Gamble pulling back, was pulling back. It's jumped back up here, but not performing kind of with the market. We're seeing some differentiation out there, which is nice to see. We have a lot of stocks like Starbucks, which are very close to upside 3-7 crossovers, but essentially look like Chipotle. Their magnitude just hasn't been big enough here just yet to get that upside crossover there. So anyway, that's where things lie as far as the signals go and potential signals here. Here's something like an Apple, which has a nice little update here, but no real 3-7 crossover. So we'll see kind of how they play out into the close here today and where they are. But that brings us to our next question: are the volatilities shifting? Well, we looked at UPS in terms of the implied volatility, and the implied volatilities are not shifting all that much. Here's the VIX today. The VIX is down 3%. Down 3%. One of the biggest market up days in history is going on today. Not just biggest market up day this year or of the last 10 years, one of the biggest market up days in history is happening today, and the VIX is barely pulling on back. It tells you what? It tells you the volatility is still there, the price stability is still not there, and we don't have to go back very far to go, okay, where do we have some of the biggest up days in history? Well, let's go take a look at 2008. And what happened then? That was the financial crisis, right? You think, well, we're not going to have big up days during then. It was just all downhill for the market, big market melting. Well, some of these up days, like right here in October, we had 2 days in November that were massive up days. Some of the biggest up days were followed by some of the harshest selling. And, it is one where, we have that style update going on right now, and almost to a greater degree than many of the updates we saw during the financial crisis here. So, volatility in terms of the VIX and option pricing is not shifting very much. It just simply isn't, yes, some of the Bank of America options, for example, the implied volatility has come down to 125. It's no longer at 160. So it has come down, and you can look at the Bank of America options, and the spreads are semi decent here with them. So we have seen a shift. We have seen a little bit of change come in with the option pricing on some of the stocks that are out there, but it's not all of them. Here for it. If you take a look at these options on Bank of America. Right. I mean, they traded higher on Wednesday, Thursday, and Friday of last week than they are trading now. And, Bank of America is basically where? Well, it's basically higher than it was Wednesday of last week. So, the options are seeing a little bit of implied volatility erosion. But yeah, they're still improving. If you nail the bottoms and get a big bounce here, you can still get some good option movement. But that's what you need to do. You've got to nail the bottoms and get the bounce. Here for that. So volatility shifting, yes, slightly, very slightly, and not in a way that is indicative of, hey, all clear sign for the market overall. But you can see the average true range today is only going to increase the average true range on the market. S&P is moving 18 points. The average true range per day is 15. 15 on the SPY. That's 150 points a day. That's just massive average true range. Just absolutely massive. And today is increasing that average true range, which is just absolutely remarkable. Absolutely remarkable there for it. So what about the metrics, right? What about the metrics? What about the 7-day moving averages, right? Number of stocks moving above or below. This is one where I mentioned that typically when we have a bounce, we're going to see this go from a really low number up to about 300. Today, we have about 300. This is a pretty good sign that there's going to be some follow-through to the bounce. That's a very good sign. So we are seeing improvement in a very bullish fashion with it. We're not seeing that with the 20-day moving average. We only have 19 stocks trading above the 20 here. So we're not seeing improvement there, but we are seeing improvement with that initial 7-day moving average and improvement that we didn't see yesterday on the early morning bounce with it. So we're seeing a little bit of improvement in that. What about the bullish percent index? Well, bullish percent index is up 15 points today. This is one of the bigger moves in the bullish percent index that we've seen in a long time. That's a very strong move, and it's one that gives a bullish signal on the bullish percent index. So we have that going on. And then if we look at some performance, some sector performance stuff, let's just come in and take a look at small caps versus large caps here, because that'll kind of show the picture of, what things are looking like. And we'll come in here, small caps and large caps. But you can see small caps down 33%, large caps down 24%. So over the last 30 days, small caps are still lagging in a big way. But if we come a little shorter term, come to something like the last 10 days, you can see that differential is shifting. Large caps are down 15% in 10 days. Small caps are down 20% in 10 days. So it's shifting a little bit. If we come in here to 5 days, you can see that small caps are leading large caps. This is one of the big differences between the bounces that we saw earlier this month and the bounce that we are seeing now. And the bounce that we are seeing now has small caps in an outperforming role, which is something that is nice to see. Over the last 3 days, we have the S&P that's up 1%. Small caps are up 4%. And that's a big shift from what we have been seeing, but it is very short term. It's extremely short term. I'm only showing 3 days here. The 30-day period is still strongly bearish, in that regard. Now, if we come and we compare the market to some of its kind of components here, like transports, so the IYT, you can see the transports over the last 3 days outperforming dramatically, which is very bullish to see. But if we come and look at it over the last month, let me pull it up here over the last month. We can see transports are down 28%, market down 24%. So transport's still in that lagging role. What about banks? Because we've talked about, hey, banks need to bottom for the market to bottom. What's going on with banks? Well, here's the XLF. It's down 33% versus a market down 24% in the last month. If we come in here to the last, let's just go 5 days, right? We can see banks are down 5%, market down 3%. So banks still lagging over the last 5 days. Over the last 3 days, though, banks are leading. Just barely, just a little bit, but we're starting to see some shift here, with bank performance in the ultra short run. And so when we look at the overall metrics, the bullish percent index is triggering bullish, but from a historical low. So there's not a lot of information or not a lot of historical data to really look at what the odds of that type of signal are. But it does, qualify as a bullish signal. The longer term stuff in terms of metrics, from volume flows to performance variations to 20-day, 50-day, 200-day moving average locations, is still strongly bearish. The ultra short-term stuff, the stuff that tends to snap back very quickly, has turned very bullish very quickly. So it puts the market vibe right now at a -6. It's 1 point away from a bull signal. It's not a bull signal just yet, but it is 1 point away there from that bull signal. So we'll see how that plays out here this afternoon. If it does go bullish, I will find my way into a SPY trade for the challenge, with the SPY call or something, along that nature here. Not sure exactly which one with the way the prices are. I mean, implied volatility of 60% on the monthly SPY option is just, it's just wow. Just wow. And the Vegas, 25 cents. So, if these come down to, they're not going to go back to their level 20, their 20% here. But if they trim off just 10%, which they could do on any given day, that's 15% value of the option just boom, gone. Gone overnight. So, just one of those where I'll have to kind of see what the pricing is if we do get that bull signal, but I will find my way into it in one way, shape, or form, and run with that. So that's where things are. That's how things are sitting right now in terms of the market, in terms of, some of the metric shifts, the volatility shifts, and, we are seeing a shift here that is more typical of a short-term 2, 3, 4-day rebound than something that is a long-term bottom is in, just buy, anything and everything, because we're never coming back down to these levels. And that's what we're seeing, at least here so far. And, that's ultimately a positive sign, for markets, but, it certainly isn't a all clear, sign for markets, at least just yet. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.